Okay, so in this video, I am going to talk about how last week I made $14,401. Now, as you guys know, the monetary amount doesn't really matter, but what really matters is the big lessons that I have here in this video about knowing when to execute and knowing when not to execute. So in this video, I'm going to talk about the strategy. I'm going to show you all of the trades that I took and why I took them. And then I'm going to tell you how I was able to capitalize so much on such a profitable week. And that is going to be the biggest secret. So make sure to stick around. So right now, let's jump onto the charts. I'm going to show you the strategy. I'm going to show you the trade. And I can tell you there is a lot of good information in this video. So let's jump onto the charts and let's see it. Okay, so this was my week in general. I took in 4 days 4 trades. All of them were winners. Well, not really. One of them looks like a winner, but it actually was a break even, but we'll get into that too. And I was able to capitalize on a 2.65R, 0R, 1.89R, and last but not least a 2.55R, which means that in total I was able to capitalize on 7R for this week. And at this point, some of you know that January was one of my worst months in general, but just this week already got me back and above break even, which means that even if I would have not traded February, the whole of February, which was also profitable, I would have just traded January and March, I would have already been profitable. And the reason for that is because you have to understand when it's time to execute and when it's time not to execute. At one point during January, people were asking me why I was not executing on as many trades, to which my answer would be, well, look at the chart. There's no trades really to be taken here. I did take a few, but there were also losses. So what I mean with that is that I reduced the amount of trades that I took. And even then, I took quite a few losses. So this is range bound. Then you have a 1 12-hour candle that is impulsive. Range bound, 1 12-hour candle that is impulsive, like 2, okay. But then range bound comes to the lows. At this point, I was already executing because this is February. It was only January right here and right here that was being quite unprofitable. And then February was clean. And at this point, I'm already making money. And so what is the first big lesson here is that for you to learn how to trade, for you to learn how to become a profitable trader, you need to understand that a lot of it is on learning when to execute and how to execute. And when to execute is very, very, very important, because if you are trying to execute the same way that I'm trying to execute here, but you're doing it on a range-bound market, then you are going to get chopped up and you are going to take losses. But then when these type of scenarios shape up, the perfect tap, when the perfect reversal appears, that's where you make the money. So for example, in this trade, I have 2.7R secured, but I'm still running 25%. And right now, the trade is running 218 pips with the 13 pip stop, which means that I'm still running 16R. Just from back here. Then multiply that by 0.25 and you know how much percentage it is. But this is not what we're here to talk about. We're here to talk about this week. But knowing when to execute and when not to execute, it's the most successful way for you to become a profitable trader. So let's look into the strategy, because what you will see is that I used 3 concepts all the time. And that is what made me profitable this week. 3 concepts, nothing else. So first off, let's go on to the weekly. Why was I so bullish on the weekly? Well, if you look at this price section, what can you see? Well, you have the previous week's high to be targeted. You have a sweep of the low. You have a tap of the bullish order block on the weekly. And then we have the inversion of this fair value gap. And the next week, we have a tap and a reaction out of this inverted fair value gap. So that to me was the sign that I told everyone, this is the time to execute. This is not the time to be like, oh, but maybe this trade does this. No, like, no. When the market is providing these clean setups, your goal is to execute. When the daily bias is clean, your goal is to execute. That is why I went on the daily, and my forecast was I'm looking for a little bit of a move up, then the market to reach back to this order block. So the market to close above this down close candle, or even this one, was enough. Tap back into the now newly formed order block once we close above, and then target the highs. Well, look at what happened. We had a bullish trade, closed above. What did the next candles do? Pull back. Now here I'm extremely bullish. This was when I took a break even. Then huge move up. This is when I took a good winner. Then huge move up, I took another winner. Because now not only did we target this high, but we also target this high. And that is why the daily bias is just so important when you are trading. Like, I personally, one of the things that I focus on the most is the daily bias. Now let's look into each trade individually, and I'm going to explain all of it, but I'm not going to go into the granular details because else it's going to be a 1-hour video. But right here, let's start on Monday. We have London Open, huge move down. What is the move down? It's not only the power of 3 on London session, but also just simply London manipulation. Sweeps these lows, and after it sweeps these lows, you start to see this move up. So where did I enter? Well, if you go into the 5-minute, what can we see? Look at how, after sweeping these lows, we start reacting bullish. So move up, move lower, move up, flips this fair value gap, retests it, and then this is where I enter. It was a little bit lower because I was just 1 minute late to the charts, and I don't really use limit orders. And then we have this push up, push lower, push up, push lower, push up. And I don't really set my TP at these highs. I normally just close before reaching those highs. And in this case, the difference was like 0.2 R, but I would rather take the 0.2 R than seeing the market then actually doing this. In this one, taking the trade off a little bit above the high was profitable. But then some of you ask, well, if you entered in this good trade, which was basically the low of the day, why not just hold it to the high and have a 1 to 10? Why not just hold to the high, have the 1 to 10, and then you are already more profitable than the whole other amount of trades that you took? And that is where the daily bias comes in. This is very important because if you look at what I said right here, this is when we had the confirmation that the market wants to move up. But before, on the previous daily candle, we had no confirmation yet. The market had not been above this high and not even above this high, which means that there was not yet any bullish order block. And so I wanted to be more aggressive in profit taking while the market is not showing me exactly what I want to see. But then the next day, we close up. So this is Monday. So what do I look for? I look for the market to come to this area to then execute on longs. What did we get? Market starts moving lower. Sweeps right here, moves up. This is where I execute, knowing that there's still this low to be taken out. But because my bias was so bullish at this time, I wanted to execute a little bit early. And so not early, but with a little bit less confluence. And so I get tagged in right there. The market comes lower, sweeps the low, and then impulses up to then reverse all the way down to my break even. And basically after the break even, so we can see this final push lower, and then the market just starts moving up. And I was like, oh my god, come on. But this is once again where a lot of people fail. A lot of people will be looking at this and be like, oh my god, why did this just take me out for break even and then started going higher? I was like, look, the market is still heavily bullish, so let's execute when the market provides bullishness. So we had full London session bullish, but then we had New York Open. So at New York Open, what am I looking for? I'm looking for the market to move lower to then move higher. I went onto the 1-hour time frame, and what did I see? I saw an order block, and I saw the fair value gap. So as soon as I see this, my entry in this case was at the fair value gap, and because we already had the tap of the daily order block, my idea was that the market is not going to come lower. And so I didn't even put the stop loss below the low. It was a 15 pip stop, which then the market reacted beautifully and then quickly hit my TP. Now, once again, a lot of people would be looking at this and say, haha, you missed an extra 0.5 R. That's so stupid. Just let the trade run. To which I say, no, that's not true. Because if the market would have swept this high, which was the final target, and moved lower, what would you have thought? I knew better. I knew that the market was going to sweep the high and move lower. And so when people are looking at this and saying, oh, I missed out on an extra 0.5 R, you need to understand that that is positive confirmation bias. Because if this trade would have moved lower, you would have been beating yourself up because you did not close at the high. And so for me, when I see these type of trades, I always take profits at the highs. At most, what I do is that I take 75% off. And then again, that also comes from a scarcity mindset. Why? Because for me, when I have such a beautiful week, I don't think, oh, there's no way I'm going to take now an extra trade. I actually look at the daily and I'm like, okay, there's still this next target that I want to reach, and we might reach it this week. So what did I do? I'll wait for the daily power of 3, which is what I'm constantly saying in this channel. And what do we have? Daily move lower, extreme move lower. At this point, a lot of people are like, oh, the top is in, the top is in. And I'm like, is it? We still have this high, clean high to take out. We just tapped the bullish order block. We're back in this order block. Look at the 15 minute. The 15 minute is losing steam at this low. Then we move up, extreme move up, tap this fair value gap, which will make me look for a little bit extra confirmation after. We get tapped in, and then the market goes for the high first, stales a little bit, and then it goes for the bigger high. So this is just beautiful price action. But what was the entry here? Well, we have the move lower, then we have the market losing steam. So the 15 minute already tells you a lot about what the 5 minute is doing. If we go into the 5 minute, we will see the market losing steam right there. So we go on to the 15 minute. We have this descending channel, move up, closes above the order block. It creates the fair value gap, creates this order block, taps it perfectly, and then moves up. As soon as I see this, my entry is at this newly formed order block. This is where my entry is at. And as you can see, we get tapped into. It basically just taps the fair value gap once again and impulses up. But this is the most important lesson that I want you to take. There are times where you execute and there are times where you don't execute. What you just saw right now was the time to execute. And then to be able to execute, you need the proper strategy to do it too. Because what you saw right here was the same principles being applied over and over again. Power of 3 and daily bias. So then on the lower time frames, knowing how to identify the market shift. You pair that when knowing when to trade and when not to trade, and you are going to be a highly profitable trader. So I hope you guys enjoyed. Make sure to check the links in the description if you guys want to support the channel, and I will see you next week. Peace.